Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of what makes companies tick with a little bit of fun and maybe a few eye rolls. Today we're diving into a filing from Vyome Holdings, Incorporated, a company we have not looked at before, and buckle up because this one has some interesting twists and turns. Before we dive in, if you find yourself enjoying these breakdowns of company reports, make sure you hit that subscribe button because we are trying to build a community of sharp investors and curious minds. Also, we have our Discord server linked down in the description where you can chat with us and other viewers about these filings and much more. Alright, so what exactly is this report all about? Well, on the 17th of December 2025, Vyome Holdings, Incorporated, the company we'll call the company for simplicity, entered into a binding letter of intent with two other entities, LiveChain Incorporated, which we'll call Lich, and Remus Capital Series B ILP, which we'll call Remus. Now, I'm going to break down what this letter of intent means because it sounds like a fancy legal document, but at its core, it is an agreement to do something significant. This isn't just a friendly chat, it is a deal to acquire and note a type of debt that Humanize, which is Sociometric Solutions Incorporated, owes to Remus. In exchange for this debt, Lich, which is a subsidiary of the company, will issue shares of its own stock to Remus. So what does this actually mean in plain English? Lich is basically going to take over a debt that Humanize owes and pay for it with its own stock. The most important part here is the ownership split. Remus will get shares representing 25% of Lich's stock right after the deal closes. On top of that, another 10% is being set aside for current and future employees of Lich. This means the original owners of Lich are expected to end up with 65% of the company after this whole thing is done. Think of it like this: Lich is bringing in new money or assets by giving away a piece of itself. Now, there are some conditions to this deal. Remus has to make sure Humanize stays afloat and can keep up with its other financial obligations. This is important because if Humanize were to go under, Lich might be left holding a bad debt. Remus also gets to put a director on the Lich board. This tells us Remus wants a say in how Lich is run, which is quite common when a significant player is involved in a deal. The Lich board and its CEO will also be tasked with raising more money if needed. And here is a bit of a kicker: Lich has to pay a $20,000 deposit directly to Humanize as a sign of good faith instead of paying Remus. The timeline is pretty tight here. The companies have agreed to try their best and finalize the actual agreements within 30 days of signing this letter of intent, and then close the deal within another 45 days after all the conditions are met. This means things are moving fast. Now, here is where it gets a little more interesting. This whole deal is considered a related party transaction. What that means is that people involved in the company Vyome Holdings also have connections to the other companies involved, like Remus. To make sure everything is above board, the company's audit committee and board of directors had to review and approve this deal. Notably, some key individuals from Remus, Mr. Krishna Gupta and Mr. John Tinkoff, recused themselves from these discussions. This is a standard procedure to avoid any conflict of interest. It shows that while there are connections, they are trying to maintain transparency. Let's take a quick look at the company's stock. Vyome Holdings Incorporated has common stock traded on the Nasdaq Capital Market under the symbol HIND. This is a small piece of information, but it tells us where you could potentially buy or sell shares of the company. Another important point is that the company has checked the box indicating it is an emerging growth company. This gives them some flexibility in how they handle certain financial reporting rules. They have also elected to use the extended transition period for complying with new or revised financial accounting standards, which basically means they have a bit more time to get their accounting systems up to speed with newer rules. So digging into item 1.01, entry into a material definitive agreement. This section lays out the core of the deal we have just discussed. It is the formal statement about the binding letter of intent between Vyome Holdings Incorporated, Lich, and Remus. The purpose is for Lich to acquire a senior secured convertible note from Humanize that is held by Remus. In exchange, Lich will give Remus shares. And finally, in the exhibit section, item 9.01, we see the actual legal document referenced. Exhibit 10.1 is the binding letter of intent itself, dated the 17th of December 2025. This is where all the nitty-gritty details of the agreement are laid out in full. Looking at the signature block, we see that this report is signed by Venkat Nalabotla, the President and Chief Executive Officer of Vyome Holdings, Incorporated, dated the 23rd of December 2025. This signifies the company's official acknowledgement and filing of this report. Now let's put on our Warren Buffett hat and see what this all means. On the surface, this is a move to acquire a debt and restructure parts of the business. Vyome Holdings is using its subsidiary Lich to essentially take on an asset that Remus holds. The key here is that Vyome is not directly buying the debt, but is facilitating the acquisition through Lich and giving up a significant stake in Lich as payment. The fact that this is a related party transaction is something to keep an eye on. While the approvals from the audit committee and board aim to ensure fairness, it means individuals with connections to both sides approve the deal. This can sometimes lead to scenarios where the terms might favour one party more than others, though the recusal of certain individuals suggests an attempt to mitigate this. The distribution of LIC shares is also a critical element, with Remus getting 25% and employees getting another 10%. The original LIC shareholders who are likely related to Vyome Holdings end up with 65%. This suggests a valuing of the debt being acquired against the value of LIC. The need for LIC to raise further capital implies that the acquired debt might be significant or that LIC has other strategic needs. The timeline is aggressive. 30 days to finalize agreements and another 45 to close means they are highly motivated to get this done. This could be driven by a pressing need to resolve humanized debt situation or capitalize on an opportunity. The fact that Remus wants a board seat is a strong indicator. They are not just selling an asset but are looking for involvement in its future success. Overall, Vyome Holdings seems to be orchestrating a strategic maneuver involving its subsidiary and a significant debt instrument. The success of this will hinge on Humanize's ability to continue servicing its obligations and LIC's capability to raise further capital. The related party nature of the deal warrants careful observation to ensure fairness and transparency moving forward. It's a complex web of relationships and financial instruments designed to achieve a specific outcome, likely aimed at strengthening the overall structure of Vyome Holdings and its subsidiaries. Alright, that is our breakdown of this interesting Vyome Holdings filing. What are your thoughts on this transaction and its implications for the company's future? Let us know in the comments below. If you found this analysis valuable, please give us a thumbs up and subscribe to the channel for more regular deep dives into the corporate world. Also, don't forget to join our Discord community in the description for more discussions and insights. Thanks for watching, and we'll see you in the next one.